Yo, what's going on, guys? It's Daniel here from Miracle Trading. In today's video, I'm going to be talking about the new ICT PD array, which is the suspension block, how to use it, what it is, what to anticipate, and so on. So first of all, the ICT suspension block is a single candlestick that is literally sandwiched between two volume imbalances. All right, a volume imbalance is a gap that forms when price opens at a certain area and opens at another certain area. So um, that creates the volume imbalance. And what we mean by that the candlestick is sandwiched between two volume imbalances is that when the gap is formed, um, it it is formed by a volume imbalance to the upside and to the downside, right? So that's what it makes it a suspension block and makes it different from a normal AVG. All right, so let me just try to draw this on the chart. So let's say this is a like this and like this, right? Yep. So we see that price opened right here and closed right here. So what is actually supposed to happen is that the next candle that is coming after this one, after this candle is closed, is that the next candle has to open right here because it closed right here, right? But it does not um, because of the volume imbalance that is going to be formed. So this is the volume imbalance right here, right? So this is, if you don't know what a volume imbalance is, this is a volume imbalance right here, right? So when a candle is opening where it's not supposed to open, so it was supposed to open right here because the previous candle closed here, but it did not. It opened here. That is a volume imbalance, all right? So now what we normally see when trading AVGs and all that is something like this. What we see, or what we're used to see trading normal AVGs, is something like this. This is our fair value gap, right? But what makes it different when it comes to the suspension block is this candle in the middle, right? This candle in the middle, when it opens above here, and this candle, the third candle, it also opens with a volume imbalance, just like that. All right. So where is your AVG now? So since we have this volume imbalance right here, and since we have this volume imbalance right here, we are going to mark our suspension block like this. We're using the whole thing because we have two volume imbalances. We're not going to use the wicks. We're going to use the whole thing with the volume imbalance like this. All right? So that is what makes a suspension block. All right? So if we go to the chart and try to find some examples, it's very simple, it's very easy, but what makes it a high probable suspension block? Because there are going to be different criteria, different scenarios where you will see this all over the chart, and you can't just use all of them just because it's a suspension block and it's a new PD array that ICT just mentioned. All right, so there's things you have to be careful of or have eyes on, which is liquidity. right? Probably we like this is the first, like whatever you're using, whatever model you're using, whatever thing you're using to, if you're trading ICT concepts, is to, you have to know liquidity. You have to know where the liquidity is. You have to be careful that liquidity is taken. All right, so liquidity sweep, and then discount and premium, and then um, the bias be aligned with the bias. All right, and then maybe SMT, which is a bonus, right? But this one right here, these two, liquidity sweep is a must. All right, discount and premium is a bonus as well. Bias um, is a bonus plus. All right, SMT is a bonus. Um, market structure shift, all right, is a must. So what you're going to anticipate the different scenarios is going to be like this, all right? So um, let's say this is price leaving some equal lows and then sweeping these equal lows, all right? So what you will be facing is, all right, we will have a suspension block right here, which is very tradable and um, very obvious, targeting these highs, for example, all right? So this is something you could anticipate. One more thing is the suspension block being shown at the distribution, or at the when price is just rallying to the upside or the downside. All right, so let's say we have something like this, right? And you're not, you just missed the entry, which was down here. Price just tapped here and made an intermediate term low. What you're going to do is, if you see a suspension block right here and a fair value gap right here, instead of anticipating waiting for price to come back to this fair value gap right here, you're going to use this suspension block right here. All right, so that's one case scenario. The other one is, um, let's say we had liquidity taken out and we have this big dealing range, and you're going to enter somewhere off of here, and you are going to target the suspension block. All right, so you're going to use it as a target. So all whatever ICT teaches when it comes to like gaps and all that entering, you can, if you can use it to enter, you can also use it to exit or to partial. All right, so right here, let's say you had an entry right here. So you're going long. Instead of waiting to go short off of this suspension block, which is right here, you're going to use it as your target. All right. So these are some different scenarios. So what to avoid is, let's say we had liquidity and a move up, and then it comes back down, and then it moves back up, and then it forms a suspension block. I would not take that. Why? Because there is liquidity resting below here. So it's always important to keep in mind the liquidity, right? The liquidity sweep is a must. So let's say, and the most important one is time, all right? Because it's time and price, not price and time. Time and price, all right? This is very important too, because when price is not aligned with your, when time is not aligned with your price, then I don't know, man. You just, you need time. Okay, so let's take a look at today's price action. This is Tuesday. February 17th. So I want you to take a look and pause the video maybe if you'd like to, and try to see where if you can spot a suspension block. All right. So just have that in mind. We're gonna take a look like this. We get a bigger picture. So what do we have? All right. So let's go back to the daily. Let's go to the daily. Let's just remove all of these. So what we have here is yesterday was bank holiday. Today was the day after bank holiday. What we have here is this is Friday's candle. So as you can see, the candle opened here, closed here, low here, and high here, which is what this candle is, a consolidation candle. All right. So what I'm interested in is certain levels right here. All right, which is the high, the low, the quadrants, and the quadrants right here. All right. So now, as we can see, if we go back down to the 15-minute and we can mark, let me just change this to orange and this to green, blue, maybe. Make this a more bold. And this right here is sell side. Sorry about that. Okay. So this is if we just go to the 15-minute, sorry, the daily. So the blue lines is the quadrants of this consolidation's wick. Now the orange is the quadrants for this consolidation's wick. All right. So if we just do this and then go back, this is the 50%. I want to just, where is midnight open? Midnight, which is right here. All right, midnight open. Purple. Okay. Now, so what we did was we took out this buy side liquidity right here. Okay, so that's 1 point. So after the buy side is taken, what do you see? Okay, what do you see after the buy side is taken? We see an aggressive move to the upside at equities open 9:30 right here, rallies to the upside, takes out the buy side liquidity, all right? Takes out the buy side liquidity, and then this right here is what? The 0.25% of the upper quadrant, all right? So what do you see right here? This is the 1-minute chart, okay? So this is 9:30. As I said, time is very important. 9:30 is right here. 9:30 opens. Price rallies to the upside, takes out this buy side liquidity. And what is this right here? this is the first presented fair value gap. Okay, so we're going to shade that. Into the first presented FVG. Okay. So we can see this first presented fair value gap being taken out with what? With a suspension block. How is that a suspension block? If we just zoom in, okay, if we just zoom in right here, all right, we can see this candle closed right here, but failed to open where it closed. So this is a volume imbalance right here. The next the third candle right here, this candle closed right here, and the next candle was supposed to open right here, but it did not. It opened right here, creating a volume imbalance. All right. So now where is the suspension block? The suspension block is from this candle's close to this candle's open. All right, just let me remove this. Just like that. And now, are you going to trade this waiting? Are you going to wait for this order block to come back to and trade to? No. This fair value gap, are you going to wait for price to come back to this fair value gap? No. All right, so if you know PD array matrix, you should know this one. And we can see we just tapped into it. Very sensitive, very, very sensitive, right? And where does this suspension block, where is it? Where did it form? On the 25% quadrant of the bottom wick of the daily, on the Fridays candle. All right, so let me remove this, and then what is this? Let me remove it. So what do we have here is a market maker sell model. All right, why? How's that? Look at these equal lows. Perfect. All right, so these were swept, I know, but it is not a deep sweep. All right, look at these equal lows. Now look at these equal lows. All right, so these are all sell side. Sell side, sell side, sell side. What did price do? Smart money reversal. All right, original consolidation, accumulation stage 1, accumulation stage 2, smart money reversal, and then offering distribution phase 1, and then macro distribution phase 2. All right, so as you can see, there's time aligned, liquidity swept, premium, the prices in premium, liquidity was swept, prices in premium, this is also in premium. We got it formed on the 25% quadrant of the bottom wick. We have obvious targets of liquidity. All right, we have time aligned, and let's see if we have an SMT with ES. If we go to the 15-minute, okay, so as you can see, failed to take out this high right here. We took out this high right here. So that is our SMT. Okay, so we have SMT as well. We have SMT as well. So this one, this case scenario right here is very beautiful. So this was the one I was talking about when price was going to take out liquidity, and then the suspension block would be something like this. This is where the suspension block will be formed. All right. So there are other case scenarios as well. Let's say if we're just going to keep on going down and then we suddenly create a suspension block right here and have a fair value gap right here. Which one are you going to choose? Of course, the suspension block. All right. So I hope you find this useful. I hope you um, learned something new at least. I tried my best trying to teach you guys. I'm sorry if I could not, but if you enjoyed this video, leave a like and subscribe, and until next time, be safe.